Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, for Friday, February 21st, 2025. This is the show where we break down all of the noteworthy moves across financial markets in 20 minutes or less. We're jumping right to the chase today. We've got charts open already. As a heads up, before we talk about this week's video, we do have our sponsor, Investors Business Daily. Check out the links in the description of the show to get access to IBD's digital subscription or their market surge platform. I use them both every single day. Check out those links in the description of this show. Thank you, IBD, for sponsoring. Today, we are talking about the whipsaw out there in markets, rejecting at all-time highs. Stock indices broke out last week. The bears fumbled the ball one time, two times, three times, and now the bulls are doing the same exact thing. 2025 is a tricky year. We're seeing it already. There's lots of sort of 180s that the market is throwing in both directions. And so we need to be sort of aware of that as investors. There's a lot more cross currents right now. We've got this coronavirus 2.0, which is shaking markets a little bit. We've got Walmart dampening the mood on softer guidance. We do have Nvidia earnings next week, and the Fed is out there also being a bit more hawkish. Let's jump into the numbers here. 1 week return. Take a look at this. You can see red firmly across the board. This time we're getting led lower by the Russell 2000. Over the past month, we've got every single stock market sector, or I'm sorry, index in the red now. Russell 2000 hit the hardest. You can see we also got a spike up, or spike is a strong word, but certainly a reaction higher here in the volatility indices. The S&P going into the weekend above 18. Now, there were some winners out there this week for sectors. There was a defensive tone despite the Walmart weakness. There was still some rotation, underway underneath the hood. Consumer staples are up almost 2%. Utilities are up 1.5%, and healthcare up over 1%. That's usually a fairly ominous, kind of a bad sign when you've got those sectors up as the top performers. Consumer discretionary, communication services, and tech were your biggest laggards. Now, if we take a look here at our smart trend filter indicator, this is an indicator we have built for TC2000. It's also for TradingView as well. Measures price and volume spanning across time with some price action relationships, kind of carves out the path of least resistance here. And you can see there's a little bit of turbulence this week. So communication services, for instance, finally starting to print a little bit of a yellow dot warning sign out here after Friday's pressure. Same thing with technology. You can see energy also transitioning up. Biotech, if you can see it right next to my head down here in the bottom left, that actually started to turn up as well. Utilities are continuing up, staples are up. So there's kind of some mixed things going on, some different sectors starting to perhaps lead, get a little bit of rotation, while some of the prior leadership groups run into a little turbulence. So something to note. Now, if we take a look here at market breadth, you can see that we don't have the ideal situation here. We're continuing to see kind of a very bumpy ride for the number of stocks hitting 52-week highs. We can't really get any sustained momentum going here. We tried last week. We were starting to work ourselves up, and then this week we really kind of fell flat-footed. Meanwhile, if you look down here on the number of stocks hitting 52-week lows, this is building some momentum. You are starting to see a sort of a more consistent bid here in the number of stocks hitting 52-week lows. Those lows are, those levels are still very low right now. There's not a lot of stocks at 52-week lows. So again, I don't want to make a huge deal out of it, but this just kind of still speaks to the question that underneath the hood, we're just not really seeing any dominant sort of trend here. We're not seeing any dominant current underneath the market hood. And so we can still, kind of keep an eye on that each week. Now, I occasionally bring this up. This is looking at a percentage of stocks at 1 month lows and 1 month highs. And I just wanted to kind of illustrate this because, we did get a little bit of selling pressure out there on Friday. So if we're looking specifically at the number of stocks at 1 month lows, you still see that in the S&P 500's case. Nothing too alarming yet. The sell-off is still pretty minor, even though it was a one-day fairly dramatic move. Pretty minor so far. Doesn't look like we're washed out yet. The Russell 2000 getting closer to some washout levels, but also not quite there yet. So let's keep an eye on this heading into next week. And if we finish off here with our macro slide, there's some positives underneath the hood. The dollar index and yields were lower this week. So we did see maybe a bit of a safety haven trade kind of going on, some rotation into treasuries on Friday as equity markets were selling off. And that, I think, just again, longer term here, dollar weaker, rates coming down, those are, kind of beneficiary sort of tailwinds that we can start to look at later this, maybe later this month. Now, if we take a look at commodities here, gold continues to work right now. There is a flight to gold, to China, and to natural gas. Those seem to be the safe three spots to move to right now. Those are obviously all working for different reasons, but it is just kind of funny that they continue to work, the three of them. Gold, though, making new all-time highs again. Silver as well, pretty strong. And then you can see oil, copper, Bitcoin all down on the week. So let's take a quick peek here. Let's take a look at some price action. We're going to kick it off with the S&P 500. Here's the weekly picture. So, we started to have some optimistic tones last week, as last week's, weekly session, we finally started to clear above the cluster of prior highs here. We made new weekly closing highs here in the S&P 500. Those breakdowns that we saw, those gap downs off of DeepSeek and tariffs and all of those attempted sell-offs really just couldn't get going. They couldn't manifest, and ultimately buyers drove us to new highs last week. Well, it wasn't a problem this week for sellers to get that momentum back. So this time it's on the buyer side. We've got a classic sort of failed breakout here at highs. You can measure it however you want versus either the mid-January high we made or these prior highs from December. Either way, you cut it. We rejected above 6,100 this week, and we did it pretty spectacularly here on Friday. This is quite the range that came in. We negated a handful of days. This week was a holiday shortened week. So it was a 4-day trading week. And so when you're looking at volume out there, it might not look too big when you're starting to look at those weekly charts. But if you were to really kind of add in that extra day of trading that we missed, we definitely would have had probably the highest weekly traded volume that we've seen perhaps this year and even going back further. So there was definitely some urgency out there. Friday's session was really the doozy here. It was 1.71% down in the S&P 500. It's one of the worst days, in a couple of months. And so the key takeaway for me is that those highs were rejected. And so as price action traders, as technical traders now, we have a spot to sort of manage risk, measure against. If we're looking to hedge on our portfolios, if we're looking to look for short exposure, if we're looking to reduce exposure, I think we have a good spot to trade against now. And that's basically, 6,100, 6,120, 6,140, whatever you want to use up here. But I think that general area now is something we can kind of key off of and really sort of understand that the market was not happy being up here for too long. And so those new highs were sold into. And so for me, I think we're in the short-term penalty box for this market, provided we stay below 6,100, let's call it, in the S&P 500. Now, of course, history has shown that we've been getting these quick sell-offs, these 1 and 2 day sell-offs that don't seem to be able to find follow-through selling. So one of the things we are going to be looking for next week is to see if sellers are still out here and able to continue lower into the beginning of next week. Now, there's a couple of paths that this market can take. The most optimistic path that we can see here is that markets basically just kind of move sideways, build out this kind of upper level base, this handle, if you want to call it that, but basically just this upper level consolidation, stay above, 59.50 or so, carve out sideways, and then boom, eventually break out, and lift up from there. That would be a very constructive technical kind of forward, path that the market can take. And of course, if it does not want to cooperate and this market wants to find follow through selling and start to lose these upper levels here, then certainly we're in store for some more turbulent, violent price action. But we're going to take it one step at a time. This market's failed to find consistent selling for more than just a few days. And let's see if that trend continues. For now, there's short-term technical damage. There's a short-term failed breakout, but that's about all we've got right now is short-term levels to pay attention to. Longer term, of course, we still have uptrends on virtually all time frames, but your time frame and your preference here is certainly going to matter. So Friday, a day to take notice. Let's see how things get followed up. If we take a look at the NASDAQ 100, you pretty much have the same thing under development this week. Friday was the day to take notice. Heavy volume coming in, rejected prior highs. The NASDAQ 100 briefly made all-time highs, and then you can see sort of sold off and closed the week on the lows. Both the NASDAQ 100 and the S&P 500 printing bearish engulfing weekly reversals. Russell 2000 not looking too hot here either. You can see just a tough week of selling. Friday, the big sell day here, big volume coming in. Again, let's see how the follow through comes in next week. Let's see if dip buyers step back right in. There's a quick shakeout and then off we go back to a bid, or is this going to be a this time is different scenario where we do get a more sustained pullback? So for now, I think it's a day to take, weeks to take notice, or Friday to take notice. And I think we got to just be on our toes a little bit. So that's really the way the broad markets, kind of fared this week. If we take a look here at gold, this continues to work here. Look at this weekly chart. Continue to find, sort of safe haven rotation into GLD. It is extended on, pretty much all time frames. Weekly chart, it's just riding well above the upper weekly Bollinger Band. This could easily see, a multiple percent, 3, 4, 5, 6% correction here after such a strong run. But for now, we let the good times roll. The trend is up. We're getting a little bit sideways here. So let's just be a little bit careful if you're jumping on this trade right now. There's some increased risk, but gold continues to be a much better spot than equities, up 11.82% this year. Just for some context, the S&P 500 is up about 2.25%. So gold is certainly having a nice outperformance start to the year. Let's take a look at natural gas. I don't often track natural gas, but I just can't ignore it after Friday's session, up 12.4%, breaking out to new recent highs here, and really, kind of carving out and getting back up towards these, levels that we saw in early 2024 January. Natural gas has been in a just a tumultuous sort of bear market here, and so it's been very difficult. You've got these brief spikes up that come with just a lot of velocity. And so if you can time these moves, if you can get in on these upswings here, it certainly makes a nice swing trade. You can see natural gas, for instance, up 40% in 4 trading sessions. That's pretty impressive, but it comes with a lot of volatility and overnight risk, and it definitely trades a little bit quirky sometimes. So natural gas, congrats to the buyers there. It's certainly extended. Weekly chart, Bollinger Bands on the daily chart. You can see we're a little above, and then the weekly chart as well as they expand up. So natural gas certainly getting some good momentum there. China continues to work as well. So China's been on our radar now for a few weeks. KWEB, for instance, had another 2.8% positive week. Daily chart, volumes coming in. You can see just increasing on these days up. It's certainly extended in the short term. There's some risk. We've clearly covered a lot of ground to the upside, but no matter what ETF you look at, or even some individual stocks for China, it continues to be a decent spot there, kind of outpacing the U.S. If we look at FXI so far this year, this is up 19%, again, to the S&P 500's 2.25%. So China continues to work as well. And if we look at some individual sectors here that were working this week, consumer staples, right? So despite Walmart, that did have that softer guide, consumer staples saw some big volume traded, particularly on Friday here. It was up 1.17%. This is sort of getting a rotation, sort of defensive premium, I think, as some of the more cyclical areas of the market do sell off. But XLP here, continuing to work itself up. You could also look at healthcare, which had a pretty decent week, again up 1.13%. And so you get, and of course XLU also up 1.5%. So those are your three big standouts. XLU not looking too bad here, especially benefiting, I think, a little bit extra from some of those rates that cooperated this week, and they continue to come down. Now, speaking of consumer staples, this is the Walmart trade. This is the Walmart chart. So you can see they reported earnings on Thursday. Stock was down 6.5%, and then we saw follow-through selling on Friday. Walmart has, certainly been on a very, very strong run. Again, almost looks like gold, right, where it's trading like a tech stock. It's been up over the past year. 2024 was up almost 100%. I mean, it almost doubled. 72%. $800 billion company. I mean, it's a pretty big behemoth. Some of that momentum, that air is now coming out of that momentum, out of that trend that has been in place here. But it looks like, a nice healthy correction down into the lower 90s, upper 80s would be welcomed, and certainly would probably set up for a nice buying opportunity if and when we can get there. So Walmart is, certainly in a little bit of that penalty box right now. And if we end this video with Nvidia here, so Nvidia is reporting earnings next week. So they do have their off-cycle report. I think it's on Wednesday. You can see that the dip here in Nvidia did come back pretty strong. Remember, this was kind of the DeepSeek initial sell-off, and then the stock kind of fumbled around for a little bit, but buyers came in and rallied this sucker 26%, filled the gap, and now you can see we're kind of rolling over a little bit. There's a lot of overhead supply here. Expectations maybe have moderated a little bit this quarter, but there's still a pretty good hurdle rate here for Nvidia. So, earnings will be certainly an interesting one to watch. They're going to obviously have some very big numbers of profitability here, but it's just a matter of, the company kind of growing into that future earnings stream. So Nvidia next week will certainly move markets, and that should be about it in terms of big earnings releases. We do have some econ data next week. We've got PCE, so the Consumption Expenditures report that the Fed likes to use for their inflation gauge. So that'll be, potentially market moving, or a catalyst, at least an excuse to move. And I think that's towards the end of the week. So that is just about everything I had this week. Let's take a look at some of the trades that we made here. It was a fairly, market perform week for our trading systems here. So we've got our fast swing trading system, slow swing trading system, and our trend following system. We were net sellers this week, so 3 buys, 11 sales. We had a handful of closed trades here, kind of mixed performance, had some good, winners that have been running, and then some recent losers as well. That looks like a typo. Let's see if the VGSH is a bit of a typo there, but still kind of working the kinks out on some of this automated reporting I have. Everything else looks pretty much on par. If we take a look at our risk exposure this weekend, so we're pretty light here. This is one of the lightest that we've had our trading systems positioned. Our short-term trading system is net short. It did thankfully come in on Friday net short and sort of helped balance out our portfolio a little bit. We do, are kind of going into the weekend at about 40% exposed on the long side. Merlin was really the hardest hit here. This had a lot of exposure on, and this was really kind of taking lumps this week. This is our medium-term swing trading system. So short-term balanced it out when you take it in aggregate, but Merlin certainly lagged us a little bit this week. And you can see we were down about 1.7%. Most of that pain felt from our medium-term swing trading system. So all in all, market perform weak. We'll see what our short-term system is up to come Monday. It's got some short exposure on the weekend. Might be set to cover some of that next week. So we'll see if it dips into any of the long positions yet, or if it's still looking for those short opportunities. So that is it. We've got lots more about these trading systems on our website at thetraderisk.com. We also have links in the description of this video. We've got our sponsor IBD. We've got some Warden TC 2000 downloads, and of course our trading systems. So thanks as always for tuning in every Friday, long form market analysis. Check back in next weekend. Subscribe if you like it, and I hope you have a great weekend. Take care.